All right. What's up, guys? I hope you're doing well. James here from jamesdforsythe.com. So, am I wrong about a potential CBDC in the United States? So, kind of my personal opinion, and I haven't gone too far into this for a lot of the videos. I just don't for my own personal stuff sometimes. But I always thought, or still kind of think, that it's a major possibility sometime down the road, or at least I should say I wouldn't be at all surprised given the amount of one, how the media is kind of, I don't know if I'd say the actual like mainstream media, but like specifically like the talk you hear about it with the Fed, a lot of the stuff with like Lil Brainerd and what she says. Sorry, I hate when the ring thing for the camera's on because I can see the reflection in my glasses, as I'm sure you guys get distracted by. But regardless, but I actually came across a speech by Governor Jay Waller again. Right, he's been doing a lot of speeches lately, from my understanding, or from what I could tell, and that is the wrong speech. But I was actually quite surprised at his opinion. To be completely honest, I was not expecting him to be against him, or at least think. I don't know if I'd say he's against them, because I do like his argument in that it is rather nuanced and he is specific. And so basically, he attacked um, and kind of explored the concept of what a CBDC, specifically a US dollar CBDC, would kind of how that would affect the US dollar from its international role, right? And would it really matter? And I was actually quite surprised by it. So, with that being said, we'll head over to the screen share of the speech. Okay, so in January 2022, the Federal Reserve Board published a discussion paper on CBDCs to foster a broad and transparent public dialogue, including the potential benefits and risks of a US CBDC. As he said before, he is highly skeptical of whether there is a compelling need for the Fed to create a digital currency. And this is where I was kind of taken aback. And he gets in and actually gives a rather, I think, coherent argument of it and does a lot of citations and stuff as I'm just pointlessly scrolling through it. but and he actually cited a lot of data that I've made videos about. So there's a couple. He cited a pair of Fed notes. He cited other speeches given by other Fed governors. There's actually like 14 or 15 citations at the bottom, and that's quite rare for a speech like this. Normally, there's only a few. I think I've never seen more than like six off the top of my head, somewhere in there. So to have like in the teens, I thought was fantastic. Gives a lot of data too. But I was just taken aback of kind of where he was. So he says advocates for creating a US CBDC often assert how it is important to the long term status of the dollar, particularly if other major jurisdictions adopt a CBDC. And he disagrees, right? And his reasoning is that the underlying reasons for why the dollar is a dominant currency have little to do with technology, and he believes the introduction of a CBDC would not affect those underlying reasons. And he really kind of cites a lot of the data going into why the US dollar still kind of remains king, so to speak, from the in terms of global trade in that respect, right? And kind of the reasons why. And I've done quite a few videos on this topic specifically to where I kind of went through a lot of charts. And I think actually specifically a lot of them, I did videos going over the sources that he actually directly cites, which I thought was pretty interesting. But kind of just going through the motions, giving his data and such. So, by any measure, the dollar is the dominant global currency for funding markets, foreign exchange transactions, and invoicing. It also is the world's predominant reserve currency. So, in terms of the dollar's reserve currency status, 60% of disclosed official foreign reserves are held in dollars, far surpassing the shares of other currencies, with the majority of these dollar reserves held in safe and liquid US Treasury securities, right? And I think I actually said this in one of the videos about the dollar as a reserve currency. and how it actually has come down to 60%, right? And it's one of those, I think it was closer to 70 about a decade ago. Obviously, without the chart in front of me, I'm not going to give specifics, but and given that it was quite some time ago, few months at least, but definitely the US dollar share as this kind of foreign reserves has decreased slightly over the past decade or so, but it's still like 60% globally is obnoxious. So even in a world of largely floating exchange rates, many countries either implicitly or explicitly anchor their currencies to the dollar. Together, these countries account for about half of the world GDP. Right? That's not a small thing whatsoever. Right? That's still the U.S. dollar is still king in terms of currencies. And now, granted, that's just kind of looking back. I'm not really planning on. I'm not going to get into the argument about the US dollar losing reserve currency status in this video because I did go into that a little bit, quite some, in a decent amount of depth, I'll say, right? In those other videos specifically about that. And I'll kind of throw those as info cards throughout this video so you guys can find it as I go through. So just so you guys can see those as well. So apart from intra-European trades, basically a trade between um, European countries to where you have both parties are in Europe. So dollar invoicing is used in more than three-fourths of global trade, including 96% of trade in the Americas, so North and South America. Approximately 60% of international and foreign currency liabilities, international banking loans and deposits, as well as international debt securities are denominated in dollars, right? And so it's really that dollar denomination that makes a huge difference, right? So, as indicated in the board's CBDC discussion paper, the dollar's international role lowers transaction and borrowing costs for U.S. households, businesses, and government. It widens the pool of creditors and investors for U.S. investments. It may insulate the U.S. economy from shocks from abroad, and it also allows the U.S. to influence standards of the global monetary system, right? And so keep in mind, he's talking about the dollar's international role. So just because this was in the CBDC discussion paper, they're not saying that the dollar needs a CBDC or America needs a CBDC to have these characteristics. They're saying it already has those characteristics without the implementation of a CBDC at the moment, right? And so basically the whole argument is, does a US based central bank digital currency change that, right? Or does a foreign CBDC change that? And we'll get into that in a second. So the dollar serves as a safe, stable, and dependable form of money around the world. It serves as a reliable common denominator for global trade and a dependable settlement instrument for cross border payments. In the process, it reduces the cost of transferring capital and smooths the world of global payments, including for households and businesses outside of America. And you can see this with like foreign exchange transactions, right? So if you want to have if you have some currency that's not very liquid, right? But there's just not a lot of demand for it globally. I'm not going to give specific examples because I'm rather ignorant on Forex in that respect, in terms of more than kind of the general how it works, right? So, say you have one currency that has very little demand globally, and you want another currency that also doesn't have a lot of demand currency for whatever reason, right? A lot of the times it's actually cheaper or easier just to use your currency, exchange it with dollars, and then use those dollars to exchange for the other currency, right? Rather than just doing the two currencies directly. It's actually a lot of the times easier and less expensive. So, to kind of explore um, how the US dollar and how its international role and CBDCs and how those all kind of interact, you have to ask kind of three questions of whether, excuse me, to see whether or not it would even be worth having a US CBDC. So he breaks it up into three different questions. So first, would a foreign CBDC affect this non-US company's decision? So basically, he's looking at it uh, from a company that is non-United States based, right? So basically, how would their demand be affected by CBDCs in different cases? So how would a foreign CBDC affect their decision? How would a US CBDC affect their decision? And then also stablecoins. Even though they're not CBDCs, how would a privately issued stablecoin affect a non-US company's decision, right? So first, looking at foreign CBDCs, so he goes on to say that is, advocates for a CBDC tend to promote the potential for a CBDC to reduce payment frictions by lowering transaction costs, enabling faster settlement speeds, and providing a better user experience. He is highly skeptical that a CBDC on its own could sufficiently reduce the traditional payment frictions to prevent things like fraud, theft, money laundering, or the financing of terrorism, which are all things that you see specifically in the discussion papers. That it was actually a series written by the BIS, which I've actually gone through like section by section in various videos, and those are the very first, I'd probably say at least around 10 videos in the CBDC playlist on my channel that you guys can look into, and I'll put that at the end, um, so you guys can get that to that easier. Basically, it's going over like pretty much the entire discussion and the cost, a little bit of the various characteristics of what could be possible for a CBDC, as well as like things like financial stability, fraud prevention, um, whether or not it should bear interest, how that should change, just to give examples, like a whole bunch of other things that are discussed in those, right? And so those are kind of his reasons for being skeptical. So, due to the well known network effects in payments, the more users the foreign CBDC acquires, the greater will be the pressure of the non US company to also use a foreign CBDC. In this case, it is true that the appeal of the foreign CBDC as a transaction medium, not as a unit of account or store of value, might gain at the expense of a dollar. Keeping in mind that currencies have those kind of three different characteristics, right? What kind of characterizes money? And so you have the whole is used as as a transaction medium, a unit, and is a store of value. That's kind of the whole three things. And so he's basically saying that this foreign CBDC might catch up only in the transactions medium to where it's used for transactions, but maybe not as a store of value or a unit of account, right? Maybe only be used purely for trade purposes. And then similar to how you could look at it reminds me a lot of like the euro dollar system in a way, in terms of like how that kind of is used mostly just for transactions. Or like it's more of like how the US dollar is used as a for transaction purposes throughout the global economy, specifically using non-US based financial institutions and banks. Um, just to kind of putting that out there and thinking out loud a little bit. So these effects will likely only be on the margin because they rely on a large enough number of individuals and businesses being nearly indifferent between the dollar and the foreign currency in CBDC form, right? So, but the broader factors underpinning the US dollar's role would not change, right? So even with a foreign CBDC, even if it was used, well, I don't know, 80% of for international transactions, whatever it happens to be. I don't know. Um, it wouldn't affect the reasons. It would not change the reasons why the U.S. dollar has that international role, really. So changing those factors would rely on large geopolitical shifts separate from CBDC issuance, including greater availability to attractive, safe assets and liquid financial markets in other jurisdictions that are at least or or that are at least on par with, if not better than, those that exist in the United States. So part of the reason why the U.S. dollar has its international role is because of deep in liquid markets that you have specifically in like US treasuries, but also like you see in stocks as well. So equities and bonds and that kind of thing, right? And you see that with a lot of foreign demand in that respect. Also with like also with American real estate as well, right? So there's that. So finally, as he's noted, it is possible for a foreign issued CBDC could have the opposite of its intended effect and make companies even less willing to use that country's currency, since digital currencies would make it easier for a government to monitor transactions. Shifting to a CBDC might make a company less willing to use that country's currency, right? Specifically for like, government surveillance and that sort of thing. And he cites kind of how it is with China's CBDC for this specific reason, right? And so that's all looking at like a foreign CBDC and how it would affect the U.S. dollar's kind of international role, and he doesn't believe it will, right? So how would the United States, if they created a CBDC, how would that affect it, right? So he's also skeptical of this, saying that it would affect this hypothetical foreign companies. Or he is also skeptical that a U.S. CBDC would affect this hypothetical foreign company's decision making. So a US CBDC is unlikely to dramatically reshape the liquidity or depth of US capital markets, right? It is unlikely to affect the openness of the US economy, reconfigure trust in US institutions, or deepen America's commitment to the rule of law. So that's kind of the reasons why he's giving the US dollar is kind of the reserve currency, right? So the rule of law of America, you can see this in like the judicial system, especially in terms of these say in financial respects. We'll go specifically just that route. And again, the liquidity or depth of U.S. capital markets, kind of touched on this a little bit before, and the openness of the U.S. economy and how foreigners can basically do work here, or not just do work, but trade and all that kind of thing. So, like a foreign CBDC, the technological advantages of a US CBDC would have a hard time overcoming long-standing payments frictions without violating international financial integrity standards. And so then he kind of touches a little bit on financial stability and how that would be affected by said CBDC. Um, but he doesn't really talk too much about a his argument, it seems, for a US based CBDC is rather similar to that of a foreign CBDC, right? It wouldn't really affect anything because it's not really the technological aspects that make the US dollar the reserve currency, right? And he also goes on to say, especially here in the stablecoin section, on how it's not so much the technology and a lot of the problems that they say a CBDC would fix in terms of the payment system are already starting to be kind of remedied, or I'll say they're already looking for solutions in through the traditional routes that they already have without the use of central bank digital currencies. So basically making CBDCs redundant in a way. So for stablecoins. So the reasons that stablecoins may be more attractive than existing options for payments include their ability to provide real-time payments at lower cost between countries that were previously poorly serviced, and to provide a safe store of value for individuals residing in or transacting with countries with weak economic fundamentals, right? So kind of like emerging markets in a way. So this is different than an intermediated US CBDC, for which access in developing economies, would depend on banks' incentives to provide such access. Stablecoins, however, may be held directly in any country that allows a citizen to do so, right? So keeping that in mind. And basically, he's saying that all these stablecoins are, for the most part, pegged to the dollar. So basically, you kind of have an implicit relationship between U.S. monetary policy and even these stablecoins in that respect. So even if they are used as such, it won't be much of a difference. So it's pretty much, yeah. This is what I was talking about. Oh, there's actually more sources than I thought it was. 16 citations at the end, which again I don't think I've ever seen in a Fed speech. Um, Also cites a book, which is new because normally it's just like prior speeches or maybe Fed notes and that sort of thing, or surveys, things like that. You see the Fred website or not the Fred website, the other one that St. Louis takes care of, right? Their actual website itself. So, yeah, keeping that in mind, that's it for this one. So, yeah, I was quite taken aback after reading his speech, right? Unfortunately, this one does not have a watch live button, so you can't actually watch it, I don't think, or you'd have to look it through a separate medium. Because sometimes you'll have it where you can just go and watch it. So let me hop back over here and stop screen. All right. So, am I completely wrong? CBDCs in general, or at least the U.S. having one. I guess time will tell, especially with some of the other research that, because keeping in mind it's just one Fed governor, but it's nice to see that there is a contrarian opinion in that respect within the board of governors, and it's not just Brainerd going to town on how much we need a CBDC. But, anyways, I'm going to leave this one here. I'll put those reserve currency and other U.S. dollar related videos throughout this video, and I'll also put the playlist for all the CBDCs, all those videos at the end as well. So, anyways, I'm going to leave it here. So I hope you guys have a good night, and I will see you on the next one.